It's also important to keep in mind is that even though we know this, we have to remember that like when money is cheap, companies grow. When they can get cheap debt, they will expand. When money is cheap, more money flows into the market. Things tend to go up. However, there is a limit and there is an expiration date on that money coming in, and thus there's an expiration date on the infinite up, which is what we're experiencing now. If you traded during COVID, everything went up. It was all fun and games until it wasn't. A lot of people got wrecked, but the cool thing is that a lot of people got into the market that hadn't previously been, which drastically increased the proportion of retail investors to institutional investors, which, like Amy said, maybe don't control the market, but we sure as hell have a lot more of a say than we did, 5 years ago. And what I've seen with stuff like GameStop and AMC, it's fun, yeah, yeah, yeah. But you need to have a good fundamental underlying value to a company for it to continue to increase substantially over time. In 99% of cases, you look at GameStop and AMC as the outliers, but don't think that those are going to write the rule for you because they won't. But what we can do is look at the indexes like the SPY, the QQQs, and just take a note from them to kind of give us an indication of where the market's going to go overall. So, like, for instance, you look at Tesla, one that we've been trading a little bit and didn't really pan out today the way that I'd hoped, or yesterday for that matter, on that one spread. And so, what we needed was more strength from the SPY today to yank Tesla up. There was strength, and it did pull it up, but not enough. Let me. So share my screen if you want to take a click, take a browse, take a gander. Give it a second. Give it a second. Give it a second. Can you see it? Can you see it?
I see it.
Yep, we can.
Okay, I see 6 of you. So you got to switch over, guys. If you were watching Amy's, you got to close the stream and then click, or just click my name where it says live, and then you can just watch it. Or, I guess, pro tip, double click user to watch. You could do that as well. So anyway, we have Tesla here. This is the weekly. So what's important here? Let's look at the SPY first. So when we look at the S&P, what we wanted to let me get rid of all this because it's just going to make this harder. Oh, there's a lot on there. So when we were looking at the S&P today, what we wanted to see was more of a pull up. I want to see this right here. This is kind of the point of no return above 430. If we can push above 430 on the SPY, we're going to see, I think, quite a bit of strength across the board. So like Tesla, Apple, I think everybody is going to find a rise there. And so like, well, it might be counterintuitive because, hey, those companies have to go up for the S&P to go up, correct. However, there are a lot of companies in the S&P. So if overall Apple is trading flat, but the S&P starts running because of the other million companies in there, Apple's going to see a nice tug up as well. They will typically follow this as the quote general market. Now today we didn't have a lot of volume, but it still eclipsed yesterday's sale volume, which is good, and it shows us a little bit of bullish strength, not a ton, but relative to yesterday, a little bit. So we have a resistance right here about 420. Like what I wanted to see today was actually a close over 415, which we got. That's a good bit of strength. Which then when we go look at the ones we're trading, right? So like your Teslas, Apples, what have you. This is what I posted in the chat on the daily and the hourly. You get a nice little, looks like it's setting up for an inverted head and shoulders. If it pans out, it pans out. I think more than likely we're going to ride this resistance down to about 620, and then worst case scenario 545. What I'd like to see was for this to have held, and then we can continue a nice bullish run back up to test these levels. Basically my target I was shooting for is about 850. Top of this range is about 922. So let's shoot for the middle, 850 to 870. It's this range right here. We wanted to see a test at the top of this range, and then we'll get a good idea as to what's going to happen because it might test right there. So let's draw a line so that you can get an idea what I'm looking at here. It's a horizontal line. Bam. So if we put that there right at about 850, right? We can then kind of ascribe a relevancy score to it, right? So like this, we look at this range, we look at this whole range, right? So dips below, comes back up. Okay, this is support again, as we talked about before. And once again, if you're not in the lifetime and you want, there are one, two, three. There's only 2 spots left now because one of them got filled yesterday. Congratulations. Two spots left. We're going to include an options price target course. I just want to give a quick one too, because people were asking me about it. It's much easier to explain here than in DMs. Basically, what we're going to do is I'm going to help you like identify. We're going to look at the whole chart, like the chart in its entirety, right? And we're going to pick apart these little ranges and estimates that we can make, or I guess estimates we can glean, speculations we can glean off of past ranges, past tests, past time periods, and then kind of put together a model, right? So like, for instance, what I want to be able to do is basically walk you guys through what it would look like to say, hey, when Tesla's at 550, what do I do? Because it's going to test a very similar, if not the same range. So what I want to do is help you guys identify the time period and the range there, which should give you a ton of pricing power in terms of trading options, especially for those of you that trade options, because you'll be able to have a clear-cut plan of, okay, Tesla, it's 550, what do I do? Is it calls or puts? And we'll have basically plans built out that you'll be able to put together as we go through the streams to determine, okay, this is what I do when it hits 550. I go for these calls at this price and this expiration. This is the estimated time frame. And then you follow it to make sure that your information's tracking well so that you can have like an increased ability to manage risk. And then the second piece of that is we're going to go through basically using short positions to hedge. So that way your losses will never be that great and you can make far more. Because if you're in a long-term option that's going to continue to grow in value and price, right? You're going to keep making money on the way up, but you get some short-term volatility. Why not make some money on that downswing if you're not wanting to sell your long right there? So that's basically what I'm going to walk you through. Okay, end of sales pitch. But that's my hope with that. So today what I see here is inverted head and shoulders. It's setting up. I don't know if it's going to continue to go. I do like this break of resistance right here. That gives me a little bit of confidence in this most recent couple days. However, we did sell off quite a bit, and then the volume tapered off, which better that the volume tapers off on the downside, right? If we're trying to take long bullish positions, I'd rather see the volume tapering off as we hit this little downswing rather than high volume, high volatility downward price action. That would not be good. We would not want to see that. That would not be favorable. At least for the positions that we took. If you took a bearish position, then it's very favorable for you. But I'm not willing to commit enough to a full-term bearish position because I don't think that the chart has yet warranted it. We have to see how this pans out first. And that was, just to give you some of my reasoning, that was part of the reason for cutting some of those Teslas loose. Is because, yeah, it's setting up, but I would have loved to have seen a nice pickup in volume today, finishing out this head and shoulders and pushing up against resistance. Then I wouldn't have sold any. I would have just held on. But we didn't see it. So we have to trade with what the chart gives us. We can't pretend and hope and hold and delude ourselves into believing that this is going to pan out just because we want it to, or that the market gives a shit if I have a bullish position, because they don't. And we don't want to pretend. We want to live in reality because this is your income you're talking about, and it's not something to play with. So if we go to some of the indicators here, what they're also telling us confirm my position that, like, I'm not sure, I'm not confident enough to say yes, but I'm not confident enough to say no. RSI trying, maybe pushing against 44, 45, so we're not in that buy range yet. Ideally, we see like 55 and up. That's strength to me. We saw it here, right, for this gap up. You know, right when it crossed above 60, so that would be on this day. That's a strong buy signal. Looking at the chart as it is with this resistance played out, if I had this all drawn out, I saw this volume, this 3 white knights coming in right here with substantial increase in volume, I would have bought heavy here, and you could have traded all the way up to, you know, $200 move, which would have made you a killing. At which point then you could see how bearish it gets because the shadow here just floods all of this buy strength here again and low volume was just killed by the selling pressure on the next couple days. And then they pumped it up, bull trap, back down. So what I really want to see, and then if you look here on the reversal, we see the opposite. Volume is slowly and steadily increasing. We see a lot of strength. These candles have a good bit of depth to them. We're talking 620-ish. Is that 620? 620-ish to 670. This is like a $50 move intraday. $100 move over 2 days. $300 move over 3 days. Which is really, no, sorry, that's not accurate. What is that? $130 move. I meant to say $150. $130 move. And then we saw this push up here. We tested the resistance, came down. We bounced, tested again, thought this was going to be the breakout because remember we got higher high, Volume's coming up a bit. We're above resistance. Everything looked well. What? Huh? Huh?
I just think it was a hot night.
Oh, okay. So I'm hoping that's not bull trap. Could be. Not sure, but could be, because I really don't like that we just faded those gains in a matter of seconds and then some. We basically have faded almost half of what they gained here. So we don't want to see a $130 move, right? And then we give up half or more. Think about it just in terms of like think about it in just terms of like a ratio, right? It's like you move 10 steps and you walk back 5. Okay, you're still ahead 5 steps, but you move 10 steps and you walk back 7 steps. You're closer to where you started than where you want to be, and I don't like that. I want to see it at least at the midpoint or ideally above. If we take 10 points, I want to give back 4 at the most, because then I know we're still ahead and we're closer to our end goal of that 10 points than we are to our starting point. So I think that thinking of things in those terms has always very much so helped me, and I hope that it helps you too. But what I really want to see here is for this to just kind of round out. I would love to see some strength in tomorrow. Again, we got those CPI numbers coming out. We're going to really figure out what the Fed is planning to do as far as the monetary tightening is concerned, and I think that will probably dictate overall market. And as the overall market's dictated by that, we know that, okay, then unless Tesla has some sort of weird event, freak event, or news, we're probably going to see it follow the general market as well. So keeping that in mind, we're not certain. I'm not certain, at least. Not certain enough to really make a heavy bet in either direction. So that's why I did what I did, just so you guys had a little bit of insight if you were holding that one. And again, please make sure you're managing the risk. That's the one thing we can't do for you. If you're only trading with $1,000, taking a $200, $300 contract is not the move. That's 30% of your portfolio. If that contract loses half, then you've lost 15% of your portfolio in one play. You do not want to do that. The best asset you have to grow is the capital that's in your account. This is the most important thing I can tell you. If you're taking 10 trades and you're stopping out at 30% on 5 of them, but you're taking a 10% gain on the rest, guess what you're losing? If you're taking say you're taking 10 trades and you win on 7 and you only lose on 3, but you lose 60% on the 3 and you only make 10% on the others, you're up 10%. That's good, but that ratio still isn't something that I'd like to mess with. So it's all about that profit loss ratio. If you don't have a trading plan, go into PBU and just make one. You don't have to be in PBU to make one. Just please get one set up so that you understand your risk reward ratio, right? Like mine is typically 1 to 2.7. I'd say that's a good estimate. I like to go 1 and 3. If I risk $1, I want to try to make 3. But in all reality, sometimes it's a little lower as 1 to 2. If we're taking like low volatility plays, it is what it is. But we also are opening, and so this is another very important thing, guys. Like, since I came back, what I told you guys is like, hey, here's my plan, here's my intent with this account. People that want to follow this should do pretty well, but you have to follow the entirety of it. You can't just take one play and then be like, what the hell? I'm selling short all of those bull put spreads and all of those other contracts. We're taking as shorts, which are basically just free money, and they also function as a hedge against some of the positions, and they put more capital in our account so we have more to work with. So if you're taking if you see the spread, but you take just the long leg of the spread, please don't do that. There's a reason that we had the short leg. There's a reason that we're taking these other plays. We're treating the portfolio as a whole rather than just an individual kind of take it or leave it. I'm not saying take every one. I'm saying make sure your proportions are right, meaning have some short plays in there so you have added capital to your account to work with, especially if you're going long on all these other positions. Take like a bear call spread against the same stock that you think is a strike above where it's going to hit. So, for instance, right, say right here, this is a good opportunity for an example. We say, and these are not alerts, this is just a hypothetical to help get my point across. Say that we're going to look at taking a Tesla 800 call long, right? We wouldn't manage risk by also adding a bull put spread, right? Because they're both bullish plays. So if it goes down, we're going to lose money 2 times faster. So if we took a long 800 call here, again, not an alert, what we then could do is take, like, if we identified 800 as price target, right? So like say best case scenario, we're going to make money as long as Tesla hits 760 on those options, right? Because we're going to we're looking 2 months in advance, so theta won't kill us. So if these go up to, if Tesla goes to 760, we'll make 30% on those long calls. Okay, great. And say that we determine, and again, this is even more benefit to if you do the lifetime and do this course, is what we're going to break down like in fine detail, granular, walk you through it. We're going to pick a price target that we don't think will hit. So like say we think there's no way Tesla hits 820 in the next month, and we're confident, right? We then sell a bear call spread on Tesla. Or, for example, we could short the 830. I believe with the way that Robinhood does options, I think it's a lower level of access to actually open the bear call spread as long as you have the cash in your account. I am not certain, but that would be something to probably ask like Swinging Bull or Amy. They might have more idea than myself. But anyway, in taking that bear call spread, we're taking a bearish position, right? Which is great and counter to our bullish position. Now, if we're bullish on the stock overall, the bear call spread is simply a hedge. However, we want to be certain that you never are really going to, in rare situations, are you going to be able to say this 800 call costs $500. It's rare that you're going to be able to hedge that full $500 without also significantly limiting your upside. What I shoot for, again, back to that ratio, if I can shave my risk even a little, it's worth it. If I have a 1 to 3 profit to loss or 1 to 3 loss to profit ratio, right? Or 3 to 1 profit to loss. If I want to make $3 for every $1 I risk, my goal here would be to decrease my risk by like 30% on the bear call spread. Because then what it also does is it kind of gives me a greater threshold, this is especially important in like high volatility stocks, where say Tesla might come down a bit more, but I don't think it's done yet. Okay, and I don't want to close the position and take the loss. That gives me an additional 30% of risk that I can take. That's if that's my high risk, strategy, which I don't recommend. The better avenue to take is to use that 30% that you get on that bear call spread as your cushion. So that way, if it comes down a little and you lose 10%, right, on your long call and say they're of somewhat proportionate value, maybe it shaves that loss down to 2% overall, right? How great is that? Because then you can have an appropriate profit loss ratio that actually will pay you in the long run, meaning say you do 10% stop loss, 10% take profit. Okay, great. That's not awesome, but if you're adding in these additional shorts, right, to hedge your risk, it trims your cost automatically. So as long as you're making money on that short, if it does come down a little, say you lose 10% and you stop out of your long, but the bearish position keeps going, you could end up making money and you stopped out and managed risk. You were able to successfully trade both ways without losing a ton as long as you had that stop loss in place. And it's these kind of more, I guess, advanced strategies I really just am excited to dive into, because this is the way to be sustainable trading options in the long term, in my opinion, is to be incredibly calculated and to ensure that your risk is always your utmost priority to manage. Because I've seen it and I've done it myself. This is not shame, blame, guilt, guys. You've seen me. I told you about the Zoom trade. It's like 40 grand in an instant. It was gone. Because I was just being an idiot. And I don't want to see that kind of stuff happen to you guys, especially for those of you that are trading with $1,500, $1,000, $500. You can bleed yourself on one contract that's $150. I don't want to see that. I want you to protect your capital because I want to see you stay here and learn how to do this sustainably over the long term. In my opinion, trading options is one of the single greatest ways to just have constant income coming in over the long term, especially for those of you. Another added benefit, I guess, for any of you that have realistically anything more than 20 grand in stocks, I think that the options price target stuff that we do with the lifetime is going to be even more beneficial, because that'll help you identify your price targets so well that you'll be able to constantly be selling covered calls against your position. So if you have a bunch of Tesla stock, you don't want to sell it, good, don't. sell covered calls against it. So if Tesla's moving up here to 955 and the IV is up and these premiums are shooting through the roof, but we are pretty confident that there's no way it hits 1,000, we sell those $1,000 calls right there. So the stock came down all the way to 615, right? So you lost like a ridiculous like half, right? You're down like 50% from when it was up here. But say you got in at $400, you're still giving away profit, and that sucks. You're not down in the position, but you could still be giving away profit. So if it falls from here to here and the stock's on $300 and you have 10 shares, that's $3,000. Now imagine if you were able to sell a covered call knowing that this $1,000 call wasn't going to hit, right? You were able to sell this call and say the premium was $2,400. It's going to basically expire worthless, right? So you've been paid $2,400 to hold your position. Here's the crazy part. You were down $3,000 from this move from here to here, but you made $2,400 in selling that covered call. You basically got paid to hold something you were already going to hold, and instead of being down $3,000, you now have $2,400 more in capital to either add to the position or do something else with it. Now, bear in mind, like that doesn't really work in real life because you need 100 shares, right? But you get the point. Is that selling those covered calls is a way of just paying yourself back. Look at it kind of like a dividend, right? It's a way to manage the risk. And then worst case scenario, if it runs, you sell your shares at $1,000 a share. Who cares? You know what I mean? You can then buy back the position when it comes back down. The point is that I'm just very excited to be able to get in there with you guys and like really break down these charts to understand these ranges and to get a glimpse of like what we see in terms of like where do we think this stock's going to go in 1 month and where do we think it's going to go in 6 months, because a lot of them it's like 1 month I'm like don't touch it, it's going to be abysmal, but it's something I'd buy for a long-term hold for 5 years. Why? Because it's a great company, I like it, but also how far do I think it's going to go? And when you can start to set those price targets, you can, number one, trade options more effectively, way more effectively, but you can also add in those short positions to hedge so that you can actually get paid to, I guess get paid to lose money is not the way to put it, but your losses will hurt substantially less, and in the rare instances where you just play it perfectly, you make twice as much money because you played the short side down and then you played the long side up, but in a way that didn't limit your upside, but did limit your downside. There's just so much to get into, and I just kind of can't wait because it's the kind of stuff I think that really like takes you from, okay, I've made a little money and I like options and I think I can do it, to like, I know what I'm doing, I'm confident, this is my strategy, and this is the amount of income I produce every month from it, to where you're steady in that confidence about your ability because you're going to be able to do so much more. I think that is probably one of the most valuable things I think we're going to ever cover in this group period, because in truth, opening calendar spreads is one of the greatest additions to my like repertoire of trading, right? Because that allowed me to capture the short-term downswing, right? But still hold the long-term position and never cap my gains. So I'm basically lowering. So if I paid $1,000 for a call that expires next year, right? And I want to hold it for another 6 months, and then I sell like weekly covered calls, right? I might, by the end of 7-8 weeks, right? I want to hold it for 6 months. Keep that in mind. So if I want to hold it for 6 months, in 2 months, I've already been paid back $500. It lowered my cost basis on the option that I'm holding by half, meaning I've recovered capital already, which exponentially increases my gain. Remember, this is all on return on investment. So I've technically only at that point deployed $500, not $1,000, which was the original cost, because those shorts paid me back. So now I'm only in the whole $500. So when it goes up 10%, it's going up 10% on that valuation of $1,000 contract, not the $500 in equity I have in the contract, right? So I have an additional $500 to go do something else, to buy more, to do whatever. Does that make sense to you guys? Can you talk in here or no?
Yes, they can talk in here.
Does that make sense the way I'm explaining it? That example specifically? Like if it's a long-term leap and it costs you $1,000 and you want to hold it for 6 months. So over the next 2 months, you're able to adequately identify your ranges and price targets and your time to expiration to then sell short a calendar spread against that option you're holding. and you get paid back every time those expire worthless, right? And you see less volatility in your account, which is really nice. And guess what? You have more capital to use in the meantime. So it basically lowers your cost basis to half. So in theory, and this is not the way I would approach it, but in theory, that option could lose half its value and you're still at break even. If that makes sense. Does that make sense? That's not the way I would utilize it, but it does apply. Does that make sense? Yes? No? Maybe? No? Come on, man. Come on. Does it make sense? Yes or no?
It does to me.
Well, I know it does to you. I'm asking them. Does it to them?
He says, just no idea how to do it. I'm really interested in this. I get it in theory.
Okay. That's all I wanted to make clear is like, in theory, does it make sense? That's all that matters. But cool.
I like to chat in comments more than unmuting.
Where are you guys talking? In live stream chat?
Options chat.
Oh. Okay. All right. Good. I'm glad it makes 100% sense. Good stuff. Good stuff. So anyway, yeah, I didn't, and I apologize. I'm not trying to make that. It's just I'm very excited about that. It's something I've wanted to do for a long time. I just now finally have like the time to really get into it and build it out the way it needs to be. So it's like comprehensive. And I'm also very excited because it's a lengthy, detailed process, and I imagine there's gonna be a million questions. So that's kind of the reason why we tied it to the lifetime deal, because if we're investing that kind of time, I want to make sure like we can be there with you to kind of ensure that it's going the right way, rather than somebody takes the course and then just leaves and then it's like, what the hell, man? I lost so much money. Because like if you go short, you do it wrong, you could lose a ton. That's why the price targets piece is incredibly essential. So anyway, let's look at Netflix, because that's the other play I want to take a look at. So this chart is ridiculous. So anybody in their right mind would have genuinely probably anticipated that this was bottom 344. There's no way we're going lower. And if they did, I imagine that they would have looked here to 204-ish to then just stay there, right? Where I had put my bottom, if you guys remember from the stream, was right about here. This is like 180. I was a little off because it ended up going a little bit lower. But we did build a base here, and we are identifying this as support at this point. And then we identified our pivot point as 204. So we now have confirmed that this is, in fact, an important line to draw, because we've pushed against it as resistance and then got rejected. And then we found our bottom here. And then we got close, rejected, and then found our support 177. So that then confirms what I thought would be the original support, right? Because sometimes things go a little oversold and they get a little haywire even though you didn't expect it, and that's fine. This was close enough. 177, 180, what's the difference? Anyway, so we then pushed against here once again. Let's stretch this out so you guys can get a clearer view. So we then tested again here, rejected, right? Now, what we want to see is for this to sustain above 190. That would be ideal. I also put out the retirement play. I do like it here to begin building a position. All in, to be honest with you, my stop's going to probably be below that support I identified, 175, 180. I'm hoping we see a little bit of a tapered sell-off here, so I can add a little more low 190s, maybe even 180s. That would be a real treat. But I don't know if we're going to get it, so I did add some today. What I want to see here is a substantial push above this 204. I think we're going to see it. I really do. I'm really liking this setup. Again, we kind of are starting to see that inverted head and shoulders everywhere. Breaking a little bit higher here, which is even better, and not coming back down to test here would be a great thing, and that would show a lot of strength, because then what that does is it opens us up to opportunity to at least 207, and then I like this little place right here about 220, at least as far as the options go. And then to get into that, to give you guys an idea, we actually saw, this is pretty cool. Oh shit, I don't know if you can, I also have to put a screenshot in here. So these are the calls that we took. And this is what I really like. You can hopefully see it now. That's a screenshot. So what we're looking at here is the chart of the calls that we added. What we can see here is substantial buying, right? And here's what I like even better is that this, in theory, based on Netflix's relative price and implied volatility, as it shows you right here, these are worth about $7 a piece, right? For some reason, we kind of shed this range down here all the way down to about $5 a contract, but on absolutely no volume, after having substantial buying right in here. So what I really want to see here is these come back up to about $7. If you waited until right before close, you actually got a better deal on these than I did. I ended up getting filled at about 560, 565, maybe 570. These would have filled at about 550 end of day. You look, you can see that somebody did start adding, unless it was you guys actually now in retrospect, that makes sense. So we're in it, and that's cool. But we have a pretty broad range here, going as low as 325 a contract. I don't think we're going to see below 5. And again, that's why I put it as my stop, because if we see below 5, then we're talking back to the $3 range, and we just don't want that. Remember, we don't want to take exponential risk for no reason when we don't have to. We just never should, to be honest with you. It should just never be on the table to take that kind of risk. Because again, the capital you have to deploy is the most important thing you have, and yet another reason why understanding the short side of options is so important, because I am just literally putting more money in my bank account to trade with. So I don't have to be cash poor because I'm holding a position that's a little more expensive than what I'm used to. It also lowers risk because, again, you put it on the short side when you're trying to go long on a particular option. So what I think we're going to see here is a little bit more of a structured sell-off. Again, volume is quite low. It's high relative to the norm, but relative to this time period, which is all we care about, the last 2-3 months, volume tapered off a bit over the last couple days. We do want to see some strength come in. I know that Netflix it's not going anywhere. I know that there's some issues in terms of like the password sharing, and people are a little apprehensive. But if we look at this as a technical trade, this setup is impeccable. I really like it. I would call it the least special. That's pretty much what it is. Just some ridiculous oversold stuff that just makes no sense. But what I really, really like is that we have this huge gap to fill back up to 330. Now, that's not to say that there isn't price action in between, but anytime we get a massive gap like that, we typically see a pretty fast move. And here is the best part. This is the pièce de résistance of this. Look at what happened here. So this is back in 2018. Netflix broke that price level that we indicated. So look at the similarity here. Tested, rejected, found support. 180, does that ring a bell? That's exactly what we were talking about. Consolidated a bit, and then once it broke, boom, gapped up to 250. If that happens, those contracts will be easily 100% gainers, and they will also be in the money. So that's why we went so close to the money, because we wanted to make sure that we were seeing some good upside there. And then we see the same thing here. Came down to about 230. We know that we'd have pretty crucial support here, 230, where we saw a hard rejection last time and a strong push up to 355. And then almost the same thing again, but this time at 250, kind of identifying this as a range that we can keep an eye on for bounces and resistance. But it also tells us that we have a pretty clear path, and ironically, right where it sold off from on this very bearish day, we have a pretty clear path to about 250, and what's even better is we're seeing some confluence, because that's where this EMA is engaged here at about 242, so slightly below, but also due to like the harsh sell-off that we saw here in the gap down. But that gives me a lot of confidence. Again, we want to see this RSI just tick above 50. Once it gets to 60, we're in a very good spot, and I might hold this a bit longer and maybe start trading short against it. Give you guys kind of a sneak preview. Just depends what the market gives us. But this one is going to be on close watch. I added it both equity and options. I will be selling short calls probably above 250 against the shares I buy, just to protect myself in the short term. Because then what's even better about that is, like, say we do test 180 and I'm unsure. And say we do get 2 days like this, right, where it broke that support, but then it shot right back up. I don't want to get my stop loss cleared out in this position. So if that's the case, and I'm not saying do that all the time, but for a company like Netflix that I actually like, I might do that, where I sell short to kind of lower my cost basis, protect against risk, protect my capital against risk, and also give me a little more breathing room on a stop if it's a long-term position that I'm taking. Not short-term, 2-day or day trade, not that. I'm talking short-term, or no, I'm sorry, I'm talking long-term position that I want to hold for a substantial period of time. That's where it makes sense to give you breathing room. Any questions? Now's your time to shine. The only stupid thing to do right now is to not ask any questions. Smart thing to do is to ask a question, even if you don't think it's a good one. Or even if you don't want to be embarrassed asking it, because that's not how this works here. You ask questions. Then I guess basically what everyone's telling me is they fully comprehend and understand everything that we just talked about, and they have absolutely no issue with any of these strategies or any of the things we talked about. And you'll be totally fine, and you don't need any further guidance on any of the things that we mentioned. That's what I'm hearing. Okay, not following. See, that's helpful. Is there anything in particular is there a particular point in time where you got a little lost, or just kind of in general? Maybe are you new to options in general, and this is kind of just like way out there? Because if you're new to options, everything I just talked about is way out there. There we go. That's a good question. 12-step trader. Yes. So that's what I like. That's a strategy I enjoy. Is I want to open the long first at the bottom if I can, right? And then kind of watch and then add the short. But say for a good example situation. I say this morning I open a position and we get through midday and the market starts looking a little bearish. Say it's a long position. At that point, I'll probably open the calendar. But a lot of times I wait till right before close, and then I just put it in there as like a risk management tool so that in case it gaps down overnight, I don't get screwed, or I don't get as screwed. So you can open it at any time. It's kind of a pain in the ass to try to open them at once as one spread because they have to initiate the sales at the same time, which is really difficult. So I typically do it that way, where I'll open the long and then I'll just kind of watch for a minute, and then I'll make sure that the short is in by end of day. So I don't ever want to be caught overnight with no risk management. JWAG, great question. I do believe that they auto sell for you if you're so only if it's in the money. So if it's not in the money, then no, it just expires worthless. Even if it's worth more than you bought it for, it'll still expire worthless. You have to sell it. If it's in the money, it'll auto exercise or auto sell for you. It'll close the position. So, for example, say you bought a 200 call for Netflix and you bought it down here, right? And you just just say you got a good deal, whatever, forget IV or forget theta, just say in theory it was worth 10% more than what you bought it for. But we closed at 197, not 200. It was not in the money. It expires worthless. Does not auto sell, as far as I'm aware. However, if you bought a 190 and you're in the money, it'll either exercise it, I think, if you have the cash, or it'll sell it for you. And I think it does that is at 2 o'clock. So I believe it does it an hour before close. It'll close whatever that position is, as long as it's in the money.
Yeah, the only way, just cut in real quick here, the only way that it's going to expire and have any value in the first place would be if it's in the money. And as far as when it expires, so if your account has enough money to auto-exercise the contract and you don't have it set to not auto-exercise, it'll exercise it on you and you will be filled on, the shares from the contract. So just like if you have a large account like that and you could be exercised and you think you may not be able to see it expire or something like that, I guess, then definitely set it to not auto-exercise unless you want to get exercised. And if you do that on Webull, I'm pretty sure it sells it at 3:30 p.m. Eastern time. it'll automatically sell it, and then on Robinhood, I believe it does it at 3 o'clock.
Okay, Tony asked, Tony, if you can give me a little more clarity. Are you, is he still, yeah, Tony's still here. Are you, oh, your server muted. I'm gonna unmute you, so, either you could talk or mute your mic. Were you referring to the equity trade or the options?
I was talking about the option when you were talking about it earlier.
Oh, okay, so well, keep in mind that that is a about 1 month to expiration. So I don't want to hold it more than a week, if that. 1 to 2 weeks max. And now, okay, so if it's in the money and just like chugging along, I'll hold it a bit longer. But if we're like, say we break up, but we're like sitting at like 206, 207, I'm not going to sit there and hold it because that theta, the time decay, is going to just destroy any gains that I had. So, in all reality, I would say probably 10 days is a good estimate at most. I'm hoping that we see over the next 2-3 days a nice push up. That's the goal here. Is by end of week we see above 204, which means we'll be in a pretty good spot and we'll be close enough to the money that we should be sitting in a healthy position. But the equity on the actual shares, that I am, yes, holding for. I will sell at targets, but I will probably retain maybe 30 to 40% of the position overall, depending on how much short premium I can collect selling against my shares. If I can sell enough, then I just keep the whole thing.
Okay, thank you.
You're welcome. So JWAG, I'm pretty sure every platform does that. I don't know if it's necessarily a settings thing. Maybe it's that's probably a good customer service question to just ask them straight up. Because I would want clarity on that, just to make sure that you don't like sit and like if you're sitting there with an options out of the money and you're like, well, it'll auto sell and then it expires worthless. You're not gonna be too happy. So I would make sure with them, the platform themselves, I would confirm and double check that just to make sure. But I'm quite certain out of the money expires worthless. They don't make any effort to auto sell for you. Right on, brother D. Glad you're here, man. Definitely make sure you make it through PBU, and I would probably do PBA. I don't know if Nikki, do you have a link for that or something? I think there's like a sign up thing with Pookie. That's like a great next step to get deeper into it.
Thank you. I'll post it.
Yeah, and then honestly, if you do those two and you really pay attention, like you're set. From there, it's just adding tools to your tool belt, but you'll have all the base things down. Barufi asks, will you be playing shop for pre-split? Pre-split, no thank you. Post-split, yes please. But I will say, I have been watching this chart, so if you remember, I charted this a little while back. This is really where I was just watching to see what happened. And as we anticipated, bearish momentum continued, dead cat bounce, dead cat bounce. We may have found a bottom here. Volume has enough strength, and this thing has sold off enough. Back down to, like, look at that. Like, full completion. It was a Christmas tree. Merry Christmas. It has lost so much value from the peak at $1,700. It is down to $300 a share. When is this split? That's going to put this at a pretty reasonable share price. What day is the split? Does anybody know?
What company is this?
Shopify.
Oh, I have that. You sent that to me the other day. Let me pull it up.
This actually looks pretty decent right here. If it makes a little bit of a move up, I think it'll probably test $500. Now, keep in mind these values we're talking about here are going to completely change. The chart will look the same, but the numbers themselves will change completely.
June 26th.
Was this maybe this was on that? I did see that news that they validated the CEO's 40% voting share. Don't really know much about that other than it happened. But Shopify is a very interesting company, and I do think that they've had stagnant growth, but they're in an industry that's just going to continue to grow and thrive. And it's used everywhere, and everything. COVID has accelerated the move from like storefront to online, but there is a weird shift happening. Now we get into the weird stuff. I'm assuming most of you are millennials. Probably the bulk of you are millennials or Gen X. Actually, let's find out. Millennials or Gen X? What generation are you? Just put M for millennial or X for Gen X. Just type it in the chat. Or Z for Gen Z if you're Gen Z. Okay, X. Come on. There's like 20 of you here. Just give me some love here. Jesus Christ. Jackson, you might be the only Gen Zingle.
Might be the only Gen Zer.
Oh man. A lot of Gen X actually. Interesting. Wow, pretty much all of you. Well, I guess we know who to market our services to. Oh, Gen C. Interesting.
Gen C. What does that mean?
He's Gen C, dude. You don't if you have to ask, you can't afford it, dude.
X.
Okay, so most of your Gen X actually. Okay, cool. Gen X are me and James are millennial, Breckle millennial. Okay, so there's a few of us. Good little mix. Rocket millennial. Okay, so the millennials are here. They're represented. But I consider us like Gen X and millennials kind of together. I would say that we're closely linked. We get along well, which is good. They call Gen X the forgotten ones. It's actually quite sad. I guess you guys were latchkey kids. I was there kind of at the end of that. But anyway, the 80s and 90s were fire. So you did get to experience like the single greatest decades of all time. So good for you and for us. Gen Z Jackson, I'm sorry to hear it. You walked into a pretty shitty world, my friend.
It's okay.
But anyway, so I have this weird faith in Gen Z. I don't know why. Don't get a big head, Jackson, but I have this weird faith. They're more self-aware at an earlier age than I believe any of us ever were. And I also see this weird shift from digital to analog happening that's not necessarily like a thing. It's not like I meant to be ironic. It's like people are just interested in those things again, it seems. And I feel like with the COVID and like people actually starting to like take a step back and like, which is why what we do here is so awesome, because like you guys are here, like you're basically starting your own business. That's what this is. Trading is your business, and you're trying to create income from your business. Most businesses take a few years to become profitable. If you can see it that way, you'll be a business that lasts. And I would say if you also look at it as a business, a good insight or opportunity for insight is to understand that like if you don't have any money, you can't pay your employees. If you can't pay your employees, you don't have a business. Right? Or say you sell products. If you can't order new inventory, you don't have a business. So if trading is your business and you don't have capital because you're just giving it away in ridiculous amounts on these ridiculous trades that are over allocated, that don't make sense for your plan, that don't make sense for your portfolio, you're basically running your business into the ground. And I would urge you to ask yourself why. Not to say that everyone's doing it, but it's something I've done, and it's something I see all the time. And it's a great, in my opinion, it's a great perspective to have on trading as your business because it puts it in a whole different light. It also puts one main thing in perspective, which is paying yourself. You know, every business I've started, like, yeah, there are points in time when I couldn't pay myself, but you need to grow it to the point where you actually can. So your portfolio needs to hit a pace and a stride and not continually lose money because you didn't manage risk or you did something impulsive. You can't look at it that way. I mean, if you're a millionaire and you're just here for fun and games, so be it. But if, you know, in that position, I'm like, I just want to pile it up. Because I don't want to worry. I don't want panic. I don't want to be wondering if I'm going to be able to like afford college for a daughter that's like not even 2. I want to be in a position where like I don't give a shit and I could pay for it and that's cool, or pay for some of it or whatever. I don't want to ever be under the gun like, oh my god, we can't eat out at all this month because we need to pay our mortgage. I just don't want to be in that position. So I cater everything I do to ensuring that I'm not in that position. And that means, like we talked about as far as the trading goes, adding the short positions, being diligent in not over allocating, setting appropriate stops, determining what our profit and loss ratio is, and then following it as if it were the law of God. We need to do these things or we will not be successful. So Evan, you're here. Why don't you? What are your secrets, man? What are the 3 main things that you did? So Evan, I know in real life, and when he wanted to join, I usually I don't tell anyone about this. I don't want people I know to join, honestly, because I just don't want to get into that weird place. Like, dude, I lost money. What the hell? And then I see you in real life, and like, even though I know I didn't do anything wrong, it's like I just don't want to be in that position. And I also don't want to be like I'll feel obligated to like offer all this stuff. I've known Evan. I was willing to give a shot, and so I just was like real intense at first. It was like, dude, don't trade at all. Do these couple things. I'll just let him tell you. What was it? Go.
Hey everybody, I'm Evan. I think I just woke up my son. He was sleeping on me.
God damn it, Evan. Why would you do that?
It's okay. I was told, he told me not to trade for the first couple months, paper trade, of course. He also told me a couple other things. If it didn't work out for me, he'd help me out a little bit. But I started off my account with like $400, and then I made it a little over $2,000. Then dropped it down some, brought it back up. You know, and I'm a little bit back and forth, but I'm way up from my $400. That's for sure. And I just started doing the stocks. You know, a little bit of long swings, short swings, couple day trades, and now I'm doing the options and little bit of everything.
Beautiful.
Definitely nice.
Do you feel that the paper trading helped give you an understanding before you ever risked your own money?
Oh yeah, for sure.
That's good.
I wish I did the paper trading with options when I first started option. You know, I didn't do that. Like even to right now, like I still like, since they just put it on Webull, every single time even today I went over, I was like, hey, I'll do some paper trading just for the hell of it. But like every time I go to try to do it, it tells me the network's down and I can't do it. I don't know why. Trying to figure it out.
I'll make a note. That might be something we could do with our bot maybe down the line. I don't know necessarily, but maybe. But that's the thing, guys, is like, so if you look at that as a business, right? Like his trading as a business, it was a $400 investment in the business, right? And it's turned into around $2,000. So basically, the business doubled when it hit 800, then it doubled again at 12, then it doubled again. So he's essentially doubled his money 3 times. So
and I also started probably started trading and dipped my toes in the water in January, but then got a lot more involved, you know, come February.
I'll be honest with you, you started at like the shittiest time too. That's the funny part. It's been a hell of a market since, and even if we look back here, like Shopify chart, look at that, like January, boom. Like most stocks did this, so, you know, difficult market nonetheless. But that's kind of the point here, guys, is like that discipline can go such a long way. And so if you take like what you just heard him say he did, right? Now imagine you're somebody with $40,000 in your account, double that 3-4 times. Now you're talking life-changing, from 80 to 120 to 180. And you're talking you took an account from $40,000 to $200,000. It's the same scale of proportion. It doesn't matter the amount. It's the same scale of proportion. But in my opinion, when you can get your options account over $10,000, that's when you really open yourself up to the possibility of like substantial compounding gains. Because if you take 2 trades at 10% each, right, and you take 20%, you just made $200 in one day. In one day. That's over 20 an hour. That pays better than most jobs. And say you did it while you're at work, you're getting paid twice. But again, if you then go down and lose half of that, you have to double your money again just to get back to where you started. if that makes sense. You need capital to work with. That profit loss ratio is your Bible. That's the thing you need to follow to a T. You should never, ever, ever go in the opposite direction of that. Every trade should fit in those boundaries at all times. And guess what? If they don't, then you just don't take it. I get a lot of people that's like, well, I'm paying to be here. Okay, great. Like, are you paying to make money, or are you paying to just like take random trades all the time just to be doing something? You're trading out of boredom, like you're already doing it wrong. There's no issue with I started trading because I was bored. But then I realized that there was a shit ton of opportunity here. Wow, Walmart is, what in the hell happened here? I would need some context to really understand what's happening here with Walmart. I haven't followed it. Why did it just gap down and then run? What the hell's going on here? Was it earnings? No, it's not earnings. So what happened here? Does anybody know? Ton of buying today, so clearly it was a buying opportunity. Can anybody have any idea? We can help a nil out, or are we just gonna have to go look on what's it called? Benviz. Waiting. Typing. Oh my god, we've been on here for an hour already. Oh, reducing inventory? Huh. Weird. Because of Target? What happened with Target?
Same deal. They're reducing inventory.
What does that mean?
I don't know. Just what I read. They got less stuff now.
So things are going to be more expensive. Christ. Oh, Target dragged down the other retailers.
Yeah, they're saying they're going to have additional second quarter costs.
So, but just Target said that, right? Not.
Yeah, it seems to be like a sympathy thing.
All right, so no, I'd play that very carefully. If you see that come down below like 122, I would probably just cut and run. Especially if you're up like that, because I would look at the top of this range right here. It's gonna probably fill this gap, so 124.50 ish. If you're lucky, that's probably where I would personally close out. Or at least then this kind of, so you'll be you are in lifetime, so you'll be in that options. This is what we'll do is okay, if I don't want to cut out and I want to keep basically how can I keep my winners without and minimize my risk. That's the kind of stuff we're going to cover, to kind of go through what type of short strategy would make sense to engage with this range right here that would limit your risk but also let you ride on your long that you're already up on. Is it in the money? No. Is it a in the money contract? What's the strike and the what's the contract details, strike and expiration? Actually, just DM me because then we'll figure this out. Because I gotta jump off here. I can't believe it's been an hour and 10 minutes. But yeah, I love y'all. Stay blessed now. I gotta go get my child. Hope y'all got something from it. Have a good one. If you have any other questions, feel free to shoot me a message, whatever. We'll answer them as best we can. I love y'all.